I want to go through 3 trades that we were able to turn free over the last 2 days. All 3 of these probably going to end up being really big winners. The goal of this video is for you to be able to reverse the process. I'm going to show you the exact trade idea as we wrote it up in our market research portal. If you're interested in being able to leverage our market research, you can do so. The link is in the description below. You do not need to commit for any more than 3 months, and there's no Discord that you have to sit in to sift through this stuff. It's really an awesome program. So what we're going to focus on here is trades that we've opened up over the last 2 to 4 weeks, what they've done since then. Hopefully you get something out of this, and hopefully it reinforces that old adage that only price pays, news is noise. If you have a plan, trade it. Fuck everybody else's opinions, because most people are wrong. Okay, so if you have something, you see something in the charts that you like, trade it. If you're wrong, that's fine. Close and move on to the next idea, but don't ever close early because some asshole has a different opinion than you. Because believe me, these 3 trades, we got lots of shit on FinTwit and YouTube when we were talking about them because other people didn't like them, and they all 3 ended up being big winners for us. So here's how we did it. First off, KKR, large cap investment manager name. Go back to December. If you look at Q3, Q4 of 2023, the financial sector led. So if you don't know that, now you do. Q3 and Q4 of 2023, financial sector led. JP Morgan was pressing up into all-time highs. We had a position in that. But so was this name, KKR. And this is a different part of the financial sector. It's an investment manager name, whereas JP Morgan is a major banking name. So 2 different types of financial names, both breaking out to all-time highs. And we wanted to diversify within the financial sector. So we bought KKR. We love all-time high breakouts. You can see that we wanted this thing above 84, and we did. We bought the all-time high breakout or around there, and we held through 2 to 3 weeks of consolidation. Now, if you're an options trader, you know what that feels like. It sucks. The premium just slowly gets evaporated. Therefore, it's important to understand that we don't stop out of options trades based off of a percentage loss. We stop out of options trades when the trade idea becomes invalidated, especially when we buy a lot of time. You're going to see the entire trade in a second. I want to set the scene here, though. KKR above the 200-day moving average, and it sloped up. For those of you that don't know, the slope of a moving average matters incredibly high. Like, it matters a lot. The slope does. So when you have a longer term moving average sloping in one direction, it generally adds more oomph to the trend that you're looking to trade. If it's to the long side and the 200 moving average is curled up, the odds of the trend continuing exponentially go up higher. We're in a bullish momentum regime, and we're in a relatively volatile financial name for a large cap at over 2%. Once again, the VRVP indicator up here at 84 would have said 0 volume, putting us in a big blue sky setup, meaning that there's probably going to be less resistance on the way up. We like that type of setup at all-time high, obviously, and therefore we bought it. Now, you can see here after the consolidation range, we obviously resumed the uptrend, and we're up and over 100% on the particular trade. Now I want to show you as we wrote it up. This is our market research portal. Once again, if you're interested in this type of stuff and leveraging what we do, you don't have time to actually do this stuff yourself, feel free. The link's in the description below. This was a trade idea we put out on KKR back in December. This was the setup, right? $84 pivot, 2.04 ADR. You can see 0 VRVP or 0 volume up there. We were just breaking out into a bullish momentum regime. We absolutely loved this particular setup. Financial sector, investment manager, industry group, large cap, volatility, risk on above 84, stop out below 75. We have profit targets at 110 and 150, and the play was the June 15th, 2024 $100 calls for no more than $2. So you didn't need an incredible amount of money to be able to play this if you didn't want to. You could get in for $2. We generally buy in 2, so a $400 commitment would have got you into KKR at 84. Here's a picture of the actual setup, and then obviously the little write-up that we put in to give you conviction on why we like it. It's incredibly important that if you take this particular play inside of the market research portal, that you always read why we like it, because there are going to be some trades that you just don't like, which is totally fine. We always justify everything that we do, though. So please, if you're utilizing the trade ideas that we post, make sure that you are generally aligned with the underlying thesis here. So that was the trade that we were looking at back in December. And as you can see one more time, we are breaking out and the contracts are up and over 100%. So what do we do here if contracts are up and over 100%? Why is that so important to us? Well, because we're batting for a bigger win here. If we go back to the actual trade idea, we can see that we're going for the 110 to 150 price target. We go back to TradingView. The 110 is all the way up here and the 150 is all the way up here. We need plenty of time. So what does selling at 100% do? If you sell 50% of your position that you are holding at 100% or more, you are effectively removing all principal risk from the trade. What does that mean? That means if the other remaining 50% that you still have on the books goes to negative 100, you lose nothing. You lose nothing. You have removed all of your original cash that you used to get into this trade from the actual trade. And so at this point, the only thing that's still being exposed is unrealized profits. That's house money. we would way rather be trading with house money, because generally we're able to manage our emotions a hell of a lot easier when we know that we're not going to have a potential trade move against us and take a huge portion of our account out. So when we're playing with house money, we're able to let these things ride a lot longer. We're able to hold through consolidations and slight pullbacks to capture the bigger move, etc., which is what we just did right here, right? The consolidation over the last 2 to 3 weeks, and you can see we're about halfway through the metered move to 110, and these are already up and over 100%. As a matter of fact, I think we have a picture there. What up? That was Potter's Discord. If we go, and we had a guy, one of our newer traders here, just post yesterday that he took the KKR trade with us, and yesterday he was up 84.85% for about a $2,000 win there. Today we're up even more, so obviously this is a 100% flip here. So we're going to be able to turn this trade free and let it continue to ride, and that's the best way to take trades inside of TTI. Stress-free trading. You don't have to worry about it anymore. Let's move on to the next trade. What's the next one? Let's go with Spotify. So Spotify gave us a 100% exit yesterday. As a matter of fact, it was a 200% exit, but we didn't exit the entire thing. So here's the setup. You can see we liked that $200 pivot. That was our entry point. Go ahead and just remove that long tool there so you can get a better look at the chart here. But we liked it off of the $200 pivot. If you didn't know this, there is statistical evidence proving that nice big round numbers tend to be sticking points to the upside and downside, right? So we all know that if you've been trading long enough, 100, 150, 200, 250, 300, etc. Those tend to be areas of contention where bears and bulls fight. And we found that on the Spotify chart. And we said, listen, if this flips the $100 area, let's just get long. Let's get long. Let's see how long this thing goes for. We were targeting, I believe, 240 and 260. And we hit 240 yesterday. You'll see the trade ID in a second. But just to set the chart up once again, it's not rocket science. Price is above the 2-day moving average. It's sloped up. Bullish momentum regime. Actually, the bullish momentum regime isn't going all the way since September. Volatile name at 2.61, better than 2. And the VRVP prior to the actual move up here to 240 was rather low, meaning that there was going to be reduced risk of overhead supply coming in and crushing this potential breakout above $200. So that was the scene. And what you can see here, obviously, a positive ER caused this thing to gap. This is what we would call a power earnings gap. It attempted to fill the gap, but it didn't. So we expect this thing over the next few sessions to continue on up into new highs, new 2-year highs. We go to the market research portal and we actually look at this, pull up Spotify. You can see the actual play as we wrote it up back in January 16th. Here's the actual chart. You can see we liked the $200 area. And you can see that low volume gap we were just talking about. This is a low volume gap that we were attacking on there. We expected very little resistance on the way up, and that's what we got. Sector, consumer discretionary, industry, entertainment. We got large caps, some volatility indicators. We wanted to be long above 200, a stop below 191, profit targets at 240, 260. In this case, we went call debit spreads for no more than $4. So $400 was your max loss per debit spread that you bought. We generally buy in 2, so $800 minimum in TTI, but obviously 800, 1600, etc. That's how this moves up. Picture of the actual trade. You can pause and read this specific trade write-up if you like, but as you can see, this trade worked out very well for us. And the best part is, because we were able to close half of it yesterday, we can let the other half continue to ride up to the second PT at 260 if you bought the call debit spreads. Around 260, we're going to be closing the full position and looking at potentially re-rolling this out into a longer dated strike, or expiration rather, and maybe a higher strike here to continue to capture this nice uptrend in Spotify. If we go back to Discord and we go to share your wins, you can see that yesterday Thomas was able to close half at 201%. So this is even better. Instead of closing half at 100% and turning the trade free, he was able to close half at 200%, which means he's locked in profit and turned it free. So at this point, even if the other half of his position goes to zero, he is still going to have profit on this trade. Once again, it's all about stress-free trading, trying to minimize risk while maximize reward. There's a reason why we didn't want to close the entire thing. Yesterday, we had every opportunity to. It was up 200%. We caught a gap up. That's great. Most people would just be, I'm so happy I caught a... It's not how we do this thing, right? We're riding to the price targets unless something on the chart is telling us that the trend is over, and at no point does a PEG scream to us that the price is over. Okay, the last one I want to go through, which some of you guys might be in, is Uber. Uber just reported this morning. So we had a webinar on Uber where we bought it back here, and we wrote it up, and then we bought it again on this breakout, and we wrote it up, and then we just bought it again at all-time high. I'll link the webinar below. It's a fantastic webinar. All three of these have been huge wins for us. Uber, once again, continuing to win for us. This is a 3 for 3 for us over the last year. So we went ahead and reopened a position at the 64 area on Uber. And as you can see, it's the same setup as KKR. It's just an all-time high pivot. We expected some resistance at all-time high, and we did. All right, we didn't actually enter Uber until we were able to get the all-time high breakout. Some of us tried to front run it, and we had to hold through some uncomfortable pullbacks, but nobody got stopped out of the trade because the trade idea did not become invalid. Once again, we do not stop out of options trades based off of a percentage loss. That's rookie shit. We only get stopped out when the trade idea becomes invalid. A percentage loss is not risk management. No matter how many YouTube and FinTwit gurus tell you, your number one risk management tool from an option standpoint is the amount of money you're putting into the trade from the beginning. It's your position sizing. Why? Because if you're playing with debits instead of credits, the most you can lose on any particular trade is the debit that you pay. That is always going to be your built-in risk management function. Okay, just to throw that out there. Hopefully you understand that. So we bought the 64 pivot. Let's set the stage. Relatively volatile for a large cap. Again, 2.46 above 64. There was zero volume, offering a big blue sky setup. We liked the bullish momentum coming off of the October lows, and we were above the 200-day moving average, and it sloped up. It's the exact same setup nearly every single time because it works. There's no reason to reinvent the wheel, right? There's no reason. If people want to sell you super complicated systems and stuff like that, feel free. Maybe we're just so dumb that it works. I don't know. We just buy things that are going up over time, and it just tends to make us some money. So you can see here, we liked this particular trade above 64. We wanted the all-time high. Once again, there was zero volume up and over in big blue sky territory. You can see the volatility that we were looking at the time. And this is actually a trade idea from our intern, Matt. Technology/software related name, large cap. It's volatility at the time above 64, stop out below 56.5, profit targets of 80 and 95. You can see that we were buying at that point the June 21st $80 calls for no more than $2. So once again, buying into, so 400, 800, etc. Max risk on the actual play. You can pause and read through the actual trade idea if you want. Here's a picture of the play, but you can see that it worked, right? We were able to flip it today, most of us, for over 100%. Yesterday for other people, depending on when you're actually able to grab this. I believe I grabbed this at exactly $2. And so I'm sitting at like 98% right now. So I think got the worst fill in the group. Not sure how that works out, but that's okay. Here we are though, Uber post ER pressing up in towards all-time highs. Incredible bullish engulfing. I don't know how many times I have to tell you guys this, regardless of what the scary guy on TV or FinTwit or whatever, which is everywhere because fear sells, and I'm telling you, it's the worst way to make money in the market. It's the best way for them to make money marketing because you're glued to your screen watching them just talk bullshit, but it's the worst way for you to actually make money. Prepping for the end of the world has very rarely been a profitable scenario for anybody except the asshole telling you to prepare for the end of the world. Buy things that are going up and sell them when they go up even more. I mean, it's really realistically not that hard. We're in a cyclical and a secular bull market that started last year early in Q1. You got to play the trends of the market. You can't try to bend the market to do what you want it to do. You have to do what the market is doing and try to take advantage of it. Those are 3 trades they were able to buy at new highs, completely de-risk out of them. So once again, all 3 trades, KKR, Spotify, and Uber, we have zero principal in any of the trades anymore. These are free trades on the books that we're able to continue to let work. Uber, that $80 price target first. I think we're going to get there within the next 4 to 6 weeks. This trade's probably going to end up being a 300 to 500% trade, but because we have straight calls and not call debit spreads, the theoretical profitability on this is infinite, which is fantastic because we have June's and it's only February 7th. Guys, my name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe, leave a comment below. And if you're interested in leveraging our market research portal, not only trade ideas, but we have 1 to 2 premium newsletters per day that go out to you either via email or in-app notifications. The last one we just put out is a Chinese stocks worth the trouble. No, it's not. Webinars. We have 3 to 5 weekly events per week that you're able to sign up for and attend. Everything is recorded and posted afterwards because we know you're busy. You're not able to make everything, and we try to make it as easy as possible for you. If this makes sense to you and you want to leverage what we're able to do, please click the description or click the link in the description below, and I'll catch you inside.